A great evening, everyone. Welcome to Prime Business. I am Pius Kujobaka. The Ghana Association of Savings and Loans Companies is pushing back against the Bank of Ghana's deadline for savings and loans companies to meet the new minimum capital requirements. The association agrees with the sector reforms but finds the 31st December 2026 deadline for existing companies to raise 50 million cedis and 100 million cedis for new entrants unrealistic. Speaking to Joy Business, Chief Executive Officer of the association, Chunibu said they will be engaging the regulator for a transitional band or an extension of the deadline to accommodate current players who cannot meet the requirement.
So when we raise the challenge that we see has to do with the 11 months duration that the central bank has given. We are of the view that that is too short a time, and by Monday, the central bank will have an official position from us on the timeline, because it just came yesterday. And so our institutions, the boards and CEOs are meeting today. Some met tomorrow, some will also meet. So it's about 11 months duration that has been given, which is too short. Of course, if you have to let somebody who is operating a microfinance company raise a capital from 2 million to 50 million, I am not sure any investor will be just willing to just dish out 48 million within 11 months. Even when you are dealing with raising new capital, we know it is not 11 months period. And so it's something that we know the regulator it has a listening ear, and he will listen to our concerns.
In another development, Chief Executive of the Ghana Association of Banks, John Iwa, has stated that concerns about potential risks to the cedi following the recent policy rate cut is unlikely. Now, according to him, strong policy credibility and sustained fiscal discipline will continue to support the stability of the local currency. His comments come at a time when the policy rate has been reduced to 15.5%, citing stable inflation and improving economic growth.
About the timing, the sequencing, and the extent of depression, not on the principle of easing. I think we need to get that clear. At this stage, risks to the cedi appear more contained than before, supported by stronger reserves, improved current account dynamics, and tighter fiscal discipline. So long as we have all these moving in the direction they are now, I think perhaps the fears may have not completely waived, but moderated to some extent. That said, exchange rate stability remains fragile in a small country which is an open economy and therefore exposed to the vagaries of global shocks and volatility in the commodity market. So the concern that we had previously has evolved, but I wouldn't say it has disappeared. So policy credibility and consistency will be critical to sustaining the confidence. And here I can say that the risks have reduced, but they have not vanished.
I want to stay all longer with the policy rate cut because the Ghana Venture Capital and Private Equity Association has welcomed the Bank of Ghana's decision to cut the policy rate to 15.5%, describing it as a positive step towards easing financing conditions for businesses. Speaking on the rate cut, the association's chief executive, Amma Gyampo, said more affordable debt is critical to supporting private sector growth.
Private equity's long-term investment is probably, the sibling or cousin to debt. So we would like to see more affordable debt on the market because obviously for working capital, it helps when the market rates are lower for people to be able to borrow at a more reasonable rate. And it helps people to repay their loans as well when the rates go lower. But of course, we are looking at a regional comparisons to other markets in the region. And so I think we still have to tackle some of the fundamentals that keep our policy rates very high in Ghana compared to other markets in the region. And so it's great to see a better macro environment this year. We're hoping that all the factors, the gold prices, all these things have been in our favor in terms of just helping us along as an economy. But of course, there's a lot more room to maneuver in terms of the government, the Ministry of Finance, looking at how we look at the fundamentals of the economy. And so I can't say this enough that the private sector is the driver of every economy. And so if we want more tax contributions, more productivity, a better a skilled workforce that can contribute towards the private sector in terms of our development and our finance requirements as a country, then we need to really support policies, incentives, tax frameworks, legal frameworks that can really encourage more domestic capital as well, especially in the global context of aid cuts and development finance cuts.
To the insurance industry now, and Managing Director of Coronation Insurance Ghana, Dr. Yao Adom Boateng, says the company's newly launched pay-as-you-earn motor insurance is designed to make motor coverage more affordable and convenient for motorists. Speaking in an interview with Joy Business at the launch of their new product, he added that the product is expected to help improve Ghana's low insurance penetration through flexible payment options and digital access. More in this report.
At the launch, Managing Director of Coronation Insurance Ghana, Dr. Yawadum Boateng, said the pay-as-you-earn motor insurance allows motorists to pay premiums monthly, quarterly, or up to 6 months instead of paying upfront. He added that the digital product available on ecoronation.com also supports road safety through contributions to the National Road Safety Authority.
So the pay-as-you-earn motor insurance enables customers to buy motor insurance by paying either on a monthly, quarterly, or up to a 6 months period. So there's flexibility. Instead of having to pay upfront, you have the option of paying for your insurance premium over a 3, 1 month or 6 months duration. So the flexibility makes it completely different from the traditional one. Traditional one requires you to pay upfront, that is one-time payment. But this one gives you the option, like I said, to spread over a 3 months, 6 months period. You're actually buying a policy for that duration. And on top of that, the second value proposition is about convenience. Now, this product is actually available only digitally on our ecoronation.com platform. So the traditional ones, you can walk into our office and have it purchased. But this one, from the comfort of your home or anywhere in the world that you are, you just log on ecoronation.com, fill in the details, make payment online, and the documents, that is both your sticker, your certificate, your receipt, all gets emailed or by text sent to you immediately.
Providing further insight, the company's head of underwriting and product development, Felix Boateng Menu, said the product was developed in response to growing customer demand for flexible payment options.
Over the years, we have seen increasing clients requesting for payments to be paid on monthly or quarterly basis. So we designed this product to be able to make these people able to purchase their motor insurance on a monthly, quarterly, or half-yearly basis. We have created a platform, that's the eCoronation. So if you go on any online and then you type ecoronation.com, you'll be able to see this product there. We are using this model to be able to cater for the needs of people, to make it convenient for people to purchase their motor insurance without going to our offices or our agency offices.
With affordability, flexibility, and digital convenience at the core of the product, Coronation Insurance believes the pay-as-you-earn motor policy could help deepen insurance penetration and reshape motor insurance delivery in Ghana.
To some energy stories now, the Chamber of Petroleum Consumers Ghana (COPEC) is predicting that the price of crude oil will hit $100 if the geopolitical tension between the U.S. and Iran persists. This is coming at a time when the price of the commodity recorded its highest increase today to reach almost $70 a barrel. But what could be the impact of this development on consumers? Duncan Amwa is the Chief Executive of COPEC.
Mind you, stopping Venezuela from supplying to China meant China needed a new market to augment their needs or their demand. Now going after Iran would simply mean that you are not only affecting Iran, but the entire Middle East region, which will supply about 1/3 of global market supply. 25% of that will go through the Strait of Hormuz. That Iran has a fair amount of control over. Any attack on Iran now, I'm sure $100 a barrel will not be far from the horizon. If you look at what the President Trump administration has said just yesterday, that indeed Iran should allow for nuclear discussions. You get a sense that they may not be far from some imminent, conflict. Once that happens, George, you are simply going to see prices go up beyond what we all expected.
Director of the United Nations University Institute for Natural Resources in Africa, Professor Fatima Denton, is calling for the development of resilient systems to support Africa's transition to clean energy. Speaking at the closing workshop of the Innovate for Clean Agricultural Technologies project, she stressed the need to build strong coping mechanisms to sustain emerging innovations and technologies driving the shift to cleaner energy.
The Innovate for Clean Agricultural Technologies project implemented by the United Nations University Institute for Natural Resources in Africa seeks to promote the adoption and diffusion of affordable clean energy solutions to boost agricultural productivity. The initiative highlights how clean agri-tech innovations can transform farming systems and livelihoods. Speaking at the workshop, Professor Fatima Denton emphasized the importance of strengthening institutional and policy frameworks to support the transition to cleaner energy sources.
Climate change and some of the devastation we're seeing, especially in terms of land systems, is affecting Africa more than any other continent. We're very much land dependent. So we need to have resilience, because our resilience sometimes, if a flood comes and, that flood it would take years for those people to recover from the devastation that the flood would have created. So we need to build inbuilt resilience so that people would have coping mechanisms, they would have buffer, they would have incentives that would support them. So that resilience for me is the core sort of anchor. And this project has been very much around creating the technologies required, but also building the resilience that is needed so that women entrepreneurs as well as women farmers can cope.
Program coordinator at Enda Energy, Jean-Pascal Correa, said the project is helping women engaged in agriculture overcome key production challenges by integrating clean energy solutions into their operations.
I will call it access to this technology. I was talking about women groups that need this technology, but sometimes they even don't know that it is available somewhere. You have to create this in terms of alleviating a kind of barrier called information. It's a basic one, but it's the first barrier we have to alleviate in terms of making this technology known, seen, available to those who need it, the end users.
As part of the project, selected innovators received a total of $37,000 in seed funding to scale up their solutions. Some of the beneficiaries shared their experiences with Joy Business.
What we're doing was we're manufacturing agric machines, rice threshers, and other agric machines, and they were all diesel powered, so which is not green, but through the program we're able to transition from the diesel engines to solar, like 100% solar. So it means that when the machines are on field and the farmers are using it, it's not going to emit any CO2 into the system, which will contribute to climate change and all that.
We have to improve on these machines that we produced, so these monies will be invested back into the machine to make them viable for the farmers to use.
The Innovate for Clean Agricultural Technologies project was implemented in selected rural communities across Ghana, Côte d'Ivoire, and Senegal.
This evening, cocoa prices have come under renewed pressure as the global market grapples with declining demand and regulatory uncertainty, even as favorable weather lifted harvest expectations across Ghana and Côte d'Ivoire. More in this report.
Global cocoa prices have fallen sharply at the start of 2026, raising fresh concerns over Ghana's export earnings and rural incomes. As at January 22nd, cocoa futures in both New York and London are trading at a multi-year lows, weighed down by weakening global demand for chocolate, particularly in Europe and parts of Asia. For Ghana, the world's second largest cocoa producer, the price decline comes at a sensitive time, with cocoa remaining a major source of foreign exchange and government revenue. Lower prices could narrow export receipts and complicate fiscal planning, despite ongoing effort to stabilize the economy. Industry data show a sharp slowdown in cocoa grinders in key consuming markets, signaling softer demand even as favorable weather conditions in West Africa point to improved harvest prospects this season. While stronger output may support supply, analysts warn that prolonged demand weaknesses and rising inventories could continue to cap prices, exposing farmers to income pressures and increasing volatility in Ghana's cocoa sector through 2026.
Thanks so much for your company. I am Pius Kojo Baka. Razak will come shortly with Prime Sports.